Hello investors, welcome back to I'M Infographics, your best platform for stock screeners and analysis. Today, we are diving into a powerhouse in the energy sector, CESC Limited. This company has been electrifying cities for over a century, but is their stock a bright spark for your portfolio? Let's find out. Section 1, Company Overview. CESC Ltd, also known as the Calcutta Electric Supply Corporation, is one of the oldest power companies in India. Founded in 1899, CESC is a leading player in electricity generation, transmission, and distribution, primarily serving Kolkata and nearby areas. Currently, the company operates a total generation capacity of about 2,500 megawatts through its coal-based and renewable power plants. But CESC isn't just about power plants. They're also active in renewable energy and have invested in distribution across other states. With growing urbanization and an ever-increasing demand for power, CESC's position in the sector is significant. So, how's this energy giant performing financially? Section 2, Financial Performance. Let's take a closer look at CESC's financial health. The company's annual revenue has been relatively stable over the last 5 years, with its main revenue driver being power distribution. In the last fiscal year, CESC reported a revenue of around 14,000 crore rupees, with a net profit of 1,400 crore rupees. Despite these numbers, the stock's performance has been fairly volatile. Over the past year, the stock has hovered between 70 rupees and 100 rupees. With such fluctuations, it's essential to consider the factors impacting its valuation. Section 3, Key Drivers and Risks. There are a few key factors driving CESC's stock. First, the regulatory landscape plays a huge role. As an electricity distributor, CESC must comply with government pricing regulations, which can impact their profitability. Rising fuel costs are another factor, especially since a major portion of their generation is coal-based. On the brighter side, CESC is diversifying into renewables, which may improve their long-term outlook as India moves toward cleaner energy. However, transitioning to renewables is capital-intensive, and the company has seen rising debt levels due to these investments. Section 4, Stock Analysis and Outlook. Now, let's talk about CESC's stock. Currently, the stock has a price-to-earnings (PE) ratio of around 8, making it appear undervalued compared to other players in the utility sector. It also offers an attractive dividend yield of approximately 5%, which is appealing to income-focused investors. Looking ahead, the Indian power sector is expected to grow significantly, driven by both population growth and industrial expansion. As a well-established player with a diverse portfolio, CESC is positioned to benefit. However, it also faces competition from newer, more agile players, especially in the renewable sector. Section 5, Stock Analysis and Outlook with Alpha and Beta Values. Now, let's talk about CESC's stock in terms of some key metrics like Alpha and Beta, in addition to its price-to-earnings ratio and dividend yield. These metrics can help us understand how CESC's stock has been performing in comparison to the broader market and what level of risk it entails. First up, beta. The beta value for CESC Ltd is around 0.8. This tells us that the stock is less volatile than the overall market, meaning it tends to move 20% less than the market does. In other words, if the market experiences significant ups and downs, CESC's stock will generally move more moderately. A beta below 1.0 often suggests that the stock is defensive in nature, which aligns with the utility sector since people still need power even during economic downturns. Next, let's look at alpha. CESC's alpha value, which measures the stock's return relative to its expected performance based on beta, is currently around 1.5%. This positive alpha indicates that the stock has outperformed its expected return slightly, given its level of volatility. Investors often see a positive alpha as a good sign, suggesting the stock has added value above what was anticipated. With a positive alpha and a low beta, CESC Ltd could be an attractive option for risk-averse investors seeking stable returns. However, always keep in mind that the power sector's regulatory risks and the transition to renewable energy may influence these values over time. Conclusion. So, should you invest in CESC Ltd? If you are looking for a stable stock with solid dividend returns and are willing to hold for the long term, CESC could be worth considering. However, if you are wary of regulatory risks and the transition costs to renewables, you might want to keep a cautious eye on this stock. Thanks for watching. Don't forget to like, subscribe, and hit that notification bell for more stock analysis and insights. Let us know in the comments, what are your thoughts on CESC Ltd? Until next time, keep investing wisely.